From the home to the office, commercial real estate is still showing signs of strain. A quarterly survey from PricewaterhouseCoopers out today shows commercial property values are expected to fall even further in the months ahead. Susan Smith is the head of PricewaterhouseCoopers real estate advisory practice. She told me that investors are still feeling pessimistic about the market.
They have a tremendous amount of problems on their plate right now. There are problems on the fundamental side in terms of tenant demand. There are problems on the investment side in terms of the ability to get debt for new acquisitions and to refinance. So it's a very challenging time for the commercial real estate industry as a whole.
And even with these so-called green shoots, and even with some of the numbers and some of the internals show that we may be nearing a bottom in this global economic turndown, you're saying that investors are still skittish?
The problem is that commercial real estate lags what happens in the economy. So even though you're seeing some of these little glimmers of hope, you're not really seeing some long concrete trends yet. So the commercial real estate industry's performance is feeling what we felt in the economy 6 or 12 months ago. So there's more of a lag effect, and you're not going to feel an immediate downturn in the commercial real estate industry if you think about where we were and where we are now. And the same can be said for the future path of its recovery. It's not going to be instantaneous. So when you do start to see some things get better in the economy, it's going to take a while for that to filter through to the commercial real estate industry.
And just as when we see in other areas of the economy that people talk about, well, your real indicator is quarter upon quarter upon quarter, a lot of people might see a blip. That's an aberration. You're saying sustained growth to you is what?
Well, you need to see sustained patterns of job growth. You need to see people out there hiring and demanding space, because when it's the jobs that create the demand for office space, for example.
Do people understand that's key, or does that get lost in the equation sometimes?
I think it kind of does get lost a little bit. I think when people look at the economy, their first gut reaction is to think about how it affects residential. But there really is a huge impact on commercial. You have consumer spending that impacts the retail sector, that will impact occupancy at regional malls, at strip centers. It's really a domino effect. And until you start to see trends that are one after another, then you're going to see the confidence return to the industry.
Let's try to break this down by region. Where are you seeing the strength, the most strength, and where are you seeing the weakness?
In terms of geography, one market area that investors this quarter and even last quarter tend to mention is the Washington, D.C. district area, even parts of Northern Virginia. That area, not that it's going to sidestep what's happening, but it tends to be a little bit more isolated. It has the government presence. The government is still spending money and is still hiring. So you have that. And, you know, believe it or not, Manhattan, the Manhattan office market, it is going through troubles right now. But long term, you know, the people that we interview, the investors that we speak to, they're looking at things for the long term as a long-term hold. And Manhattan is still considered a good investment, a nice, viable, long-term place.
And they want to be in on the ground floor when it eventually turns around.
Absolutely. I mean, now is the time to get into the commercial real estate industry. So when you look to on that side, okay, things may be really bad right now, but from an investor, you want to get in on the bottom. You want to get in when prices are down and prices are low, and you want to ride the cycle up. So it really is a great opportunity to buy, but you have a lot of challenges.
And where are the areas of concern? Where are we seeing weakness? Which regions?
In terms of geography?
Yeah.
I'll tell you, Phoenix is always putting up a red flag with investors. Parts of southeast Florida, that's another red flag area for investors. Parts of Southern California. It's interesting that a lot of the places where you saw the residential bubble burst and you saw a lot of residential problems, those problems have spilled over into the commercial sector. Las Vegas, big condo problems over there, big oversupply issues, and they really have trickled out to the whole entire local economy, and that includes commercial.
And that was Susan Smith, head of PricewaterhouseCoopers real estate advisory practice. Ms. Smith added that commercial real estate isn't expected to begin its recovery until 2011.